Ajay Bodke joining us this morning. Ajay, what are you making of it? Do you feel perhaps we're going to see further correction or stability at these levels?
I think we have seen a significant correction in the market over the last few sessions. And I think all eyes will be on how the government is able to navigate the three key bills in the upper house of parliament, namely the coal bill, the MMRDA bill and the insurance bill. And if the government is able to convince the opposition in getting these three bills cleared in the upper house, I think that would, in my opinion, be a strong trigger point for the markets to stabilize and again start rallying. Now, insofar as land bill is concerned, I think the market is reconciled to the fact that there will be a lot of debate on that bill, and it is very much possible that that particular bill might not see the light of the day, at least in the upper house in the current session, although the government does have a strong majority in the Lok Sabha, and possibly with some amendments it could get cleared in the Lok Sabha. But the other three bills, I think, are very crucial from the medium-term perspective for the market.
All right, Ajay, stay with us. We're going to take a very quick break, come back with the pre-open. Do stay tuned. Back in a moment. We're in conversation with Ajay Bodke. We're also watching out for the pre-open. The SGX indicating a flat start right now. And we've got an IPO today as well coming up on your screen. We've got the latest information on that Ad Labs IPO, which we'll also be tracking for you today. Ajay, of course, as always, we saw quite a bit of pressure in a weak market on the banking pack. Even private sector banks yesterday took quite a bit of tumble. Axis, one of the biggest losers there. I want to get your call on the Bank Nifty and some of those banking names.
I think we are positive on the frontline private sector banks, and the current corrective phase, in our opinion, is offering a good opportunity for investors who have a medium-term perspective to get into some of these good names. So in particular, I think we would be looking for entry into banks like HDFC Bank and Axis Bank on the private sector side, and also on the public sector side. I think yesterday's fall rather, I think we saw that some of the public sector banks which had already fallen by around 25 to 30% from their peak over the last 1.5 months clearly are now showing signs of stabilizing, and we did not see too much of shaving off in those banks. So I think at some point in time, some of the frontline names on the public sector banking side also could looked at from a perspective of medium-term investments. And in particular, I would look at names like SBI and a PNB or even a BOI. BOI and Union Bank in particular are trading at nearly 50% discount to the book value. And from a value perspective, I think there would be investors who would be willing to bet on them, assuming that the economy does pick up steam a quarter or two from now, and interest rates continue the downward march over the next 15 to 18 months. Some of these names could offer a good value from medium-term perspective.
All right, Ajay, we've got, of course, pre-open looking fairly stable. What's your view, Ajay, going ahead from here in terms of where you see the markets really stabilizing, and also in terms of, if you feel the conviction in the market is still there, what would you buy on dips in a market like this?
I think I would tend to agree with your assessment that the market should trade in a range for the next couple of months. On the downside, I see it difficult, the market breaching 8,500. Because even if in the short term, I think there could be pressures on FII outflows in case the US economy, in case the belief becomes stronger and stronger that the US would start raising rates earlier than what the market was expecting. Let's not forget that India, as long as the commodity prices remain benign, and in particular crude, which lately we also seen again weakening from the short-term moves that we saw. India is the largest beneficiary, and the commodity exporting pack are the ones that will lose the most. So from the fiscal deficit clearly has been controlled by the government. We are seeing current account deficit well under control. The currency leaving aside the bobbles that one has seen over the last few days clearly has been one of the strongest for the last 12 months vis-a-vis the other emerging market peers. So the from macroeconomic perspective, I think the country is poised to be one of the biggest beneficiaries of this fall in commodity prices. That's why I said, I think, how legislative agenda moves going forward, and if the government is able to clear these three important bills in the upper house, then I think one can again start seeing, for instance, if insurance bill gets cleared, then we have already seen some of the insurance biggies committing publicly that they would like to come and increase their stake to 49%. And that's again large amount of capital coming in the FDI, which is more sticky capital. And we are seeing government's Herculean efforts to revive investment cycle, especially in the roads, railways, defense. These are three sectors which people are very enthusiastic about. So I think on every dip, I think you'll find large flows coming in both from the foreign as well as domestic investors. So I think a downside of maybe 100 points in the worst case scenario from the current levels. On the upside, I think, the previous highs are sort of, it will be difficult for the market to breach in the short term. But then I think if you are taking a 3 to 5 year perspective, I think India would be the best placed market in our perspective from equity investments. Okay,
Ajay, let's talk about certain themes. So we got capital goods stocks looking a bit, positive in pre-open. They suffered a bit of a knock, last week, but then they always seem to claw back. What's your outlook when it comes to the twins, BHEL, L&T, in terms of new orders coming in terms of sort of actually starting to see earnings reflect things on ground?
Yeah. Larsen & Toubro figures among our top buys. I think we believe that it is best placed, having its presence in almost all the subsectors in infrastructure plus defense. Again, within defense, I think the submarines, power sector also, it has a strong presence. So I think from any person, any investor's perspective who is looking to build a medium-term portfolio, Larsen should figure as core part of the portfolio. In addition to that, one can start looking at companies like Cummins India and Ashoka Buildcon in the road sector. In fact, there was a news item that the Honorable Minister of Roads has said that 26 projects which were stalled, highway projects which were stalled for many years, the government is committed to reviving them before the end of the current financial year. Now, that could act as a good tailwind for many of the stocks in the road sector, and we believe Ashoka is well poised to benefit from large capex that will be unveiled by NHAI and other state governments in the road sector. Insofar as BHEL is concerned, I think our view essentially is that one needs to wait and see what kind of order accretion happens to the company, because the power sector has been the biggest problem in infrastructure, but the government has said that on a plug and play basis, 5 projects over the next 15 to 18 months, they are committed, UMPP projects of 4,000 megawatts each. They are committed to put out for bidding, and 2 projects they are hopeful to do it fairly soon. So that's large amount of orders which are on the anvil. But we've got to wait and see how competitive BHEL is in grabbing some of these orders.
Sesa Sterlite in focus today as well, Ajay. They've trimmed their capex going ahead. The stock's been looking a little weak. What would be your outlook on Sesa? And if you're not tracking Sesa, then also just give me a broader context on the metals pack, which has also taken quite a big hit.
Yeah, we don't track Sesa, so I'll not be able to comment on it. But overall, our metals analyst continues to remain extremely worried on the metal space. He believes that till such time that we see some signs of stability emerging on the China front, which is the largest contributor to demand in many of these industrial metals and coal, he would sort of be worried in putting a buy on some of the metals names. That's why we do not have any metals name figuring in our top picks.
All right, Ajay, thanks so much for joining us this morning. Do have a good day going ahead. Let's take a break.